Okay, let's start with the foundation that makes everything else possible: compliance infrastructure. The PiCore team has confirmed their compliance modules are in final sandbox testing phases. Now, this isn't just some generic blockchain development. These are specialized systems designed to interface with SWIFT-aligned financial institutions. For a bit of context, SWIFT processes trillions of dollars in international transactions every single day. If Pi's modules can really demonstrate interoperability with SWIFT infrastructure, it puts them in direct competition with XRP and Stellar, who are basically the established players in this space. But here's what's fascinating. Pi is, at the same time, stress-testing decentralized compliance APIs that let third-party developers and financial entities verify Pi transactions in real time. And honestly, this is critical for institutional adoption, because banks and financial institutions, they need regulatory certainty. They just can't onboard a cryptocurrency that operates in a compliance gray zone. So, think about what this means practically. Say, a bank in Kenya wants to offer Pi-based remittance services. Their compliance department needs to verify that every transaction meets anti-money laundering standards and know your customer requirements. Pi's APIs would, at least in theory, allow that verification to happen without centralized bottlenecks. It's decentralized infrastructure, but it's still meeting institutional regulatory demands. And, the timing is deliberate. With the global ISO 20022 migration wrapping up next month, Pi is positioning its compliance systems to launch at the same time. If they pull this off, they're not just entering a mature market. They're stepping in during a transition period when institutions are already rebuilding their payment infrastructure. Still, sandbox testing doesn't equal proven performance at scale. The gap between controlled testing environments and real-world operational stress is honestly enormous. We really need to see these systems handle actual institutional volume before we can declare victory. Now, let's examine the two pilot programs that represent Pi's first real-world utility test. PiBridge is an interchain liquidity system designed for swapping Pi with stablecoins like USDC and fiat-backed tokens. This addresses one of Pi's biggest challenges: liquidity and convertibility. If Pi holders can't easily convert to usable currencies, the ecosystem just can't function. PiBridge, at least in theory, solves this by creating on-ramps and off-ramps through established stablecoin infrastructure. PiPay is the consumer-facing application that's being tested in Nigeria, Vietnam, and the Philippines. These aren't random market selections. These are countries with large unbanked populations, mobile-first economies, and significant remittance corridors. Honestly, it's like the perfect testing ground for Pi's value proposition. Here's what we know. PiPay allows users to pay merchants directly with Pi, with immediate conversion to local currency through partner payment gateways. In the first 2 weeks of operation, these pilots processed over 100,000 transactions. That's not just hypothetical usage. That's real people buying actual goods and services. But we need context here. 100,000 transactions across 3 countries over 2 weeks is promising for a pilot, but it's still minuscule compared to established payment networks. The question isn't whether Pi can process transactions in controlled pilots. It's whether they can scale to millions of daily transactions while maintaining speed, security, and regulatory compliance. Quick pause. If this breakdown is revealing developments you haven't seen covered elsewhere, hit that like button right now. This kind of on-the-ground research and analysis takes serious time, and your engagement helps this content reach more people who need objective coverage. And if you're not subscribed to TJ Crypto World, smash that subscribe button and turn on notifications. We're tracking Pi's execution in real time, not just recycling press releases. Alright, let's continue. Pi Network has reportedly signed non-disclosure agreements with 2 Asian fintech companies to test remittance corridors and microfinance applications. Names haven't been disclosed, which is standard for early-stage partnerships. These companies are allegedly evaluating integration of Pi into existing mobile banking systems. Analysts are interpreting these early regulatory engagements as positioning Pi to become a compliant crypto asset in emerging markets before expanding to developed economies. It's a reverse strategy compared to most cryptocurrencies that launch globally and deal with regulations reactively. Regulatory discussions don't guarantee approvals. These processes take months or even years, involve extensive documentation, and can result in restrictions that limit functionality. We're seeing early-stage engagement, not confirmed regulatory green lights. Community activity and mainnet timing. Let's talk about what's happening at the community level, because this might be Pi's most underestimated advantage. So, Pi's more than 50 million users are, shifting from just passive mining to really becoming active participants. Community-run marketplaces have actually popped up in over 30 countries where folks are trading goods, services, and even digital art using Pi. This kind of organic economic activity really shows that people already see Pi as valuable even before the official mainnet launch. Now, here's the controversial part. Insiders are suggesting that the open mainnet launch is, going to be strategically delayed to the first quarter of 2026, even though the ISO activation date is still set for November 22nd. Many people are probably going to see this as just another broken promise. But let's consider another angle. Maybe Pi is actually prioritizing infrastructure hardening and regulatory positioning instead of just rushing to market. If they were to launch with incomplete compliance systems or not enough liquidity, it could seriously hurt adoption. So, a few months delay to make sure the systems are robust might actually be a smart move, not a problem. Alright, let's step back for a second and look at what's really going on here. Pi isn't just some speculative experiment anymore. They're actually building payment infrastructure, facilitating real transactions, working with regulators, and even attracting institutional partnerships. That's honestly a huge leap forward. Compliance systems are being tested, payment applications are processing transactions in multiple countries, fintech companies are evaluating integration possibilities, regulatory frameworks are being navigated proactively. The next 3 to 6 months will answer that question. Watch for expanded pilot program results, announced regulatory approvals, confirmed institutional partnerships, and DEX launch performance. Alright, crypto revolutionaries, that's the comprehensive breakdown of Pi's latest developments that mainstream coverage is ignoring. Massive appreciation to everyone who watched through to the end. You're the community that demands substance over hype. Before you leave, I just published another analysis comparing Pi's approach to XRP's institutional strategy and Stellar's financial inclusion model. It's linked in the description and on the end screen. Essential viewing for understanding Pi's competitive positioning. Until next time, stay critical, stay curious, and keep building wealth strategically. This is TJ from TJ Crypto World, signing off. Peace.